Hi everyone, Jen here. A very short message before I hand this over to Jim. If you are not subscribed to our emails already, be sure to sign up and make sure that you respond to the email consent to opt in. Tomorrow we will be sending out the first of 6 key characteristics that Jim has identified as essential for success as an individual trader. The Live Intensive has a prerequisite requirement of the Foundation and Application of the Market Profile e-course. Take advantage of our limited time discounted bundles. They will be available for another 3 weeks through Sunday, October 6th. Start now so that you can focus and prepare for the last long format intensive that Jim will be doing. All of the webinars for the Live Intensive will be recorded in case you are not able to attend live or live in a time zone that isn't convenient for you to join every webinar live. And you will get access to materials for a period of 1 year after the course finishes so that you have time to review. If you have any questions, don't hesitate to contact us.
The week ahead, I still see no significant longer-term directional funds in the market. I have continued to observe over six decades that successful short-term trading revolves around making independent assessments of current inventory condition. Short-term traders are heavily herd-oriented. This herd orientation leads to constant overstaying the auctions. If you look at the graphic, labeled A on the graphic, inventory got too long. B, inventory got too short. C, currently where we are, inventory is growing overly long once again. Structure is your best signal to have some indication of when markets are getting too short or too long. Some days you'll see the market may one time frame, but there'll be little squatty profiles, or other times they will be extremely spread out. And when they're extremely spread out, that is usually an indication of very heavy emotion. One of my longtime friends / clients called me on Wednesday afternoon to tell me that he had his best day ever in the market. And what he said was, as the market was going down, he said all he could hear in his head was me saying, the market's getting very strung out. The market's getting very strung out. And of course, he got that covered as short. He got very fortunate, and it was an unbelievable move to the upside. But I want to use Wednesday to give you a deeper idea of what I think happens from time to time in these markets. Normally, the traders, the big traders, or the options market makers can keep their hedges in line. However, from time to time, just like us, they get trapped, which is what I think happened on Wednesday. As the market declined, the hedges became short. When the market began to rally, the market makers had to buy in order to maintain their neutral hedges. That continual buying by the market makers drove the market even higher. You may have heard me over the years talk about my friend who went 10 million debit in 1987 on the CBOE. He was the second largest market maker on the floor, but something like this happened. And it's just, if they're trading in large size, there's no place to go. There's no merchandise. After all that said, hopefully that gives you some understanding of what took place on Wednesday, and understand that these market makers or hedgers, they can get caught also. With all that said, I have no guidance to begin the week. When the market is, within the multi-day trading range, I think that Wednesday's FOMC release and chairman's conference will draw the market's attention. we have the continual discussion. Are we going to have 25 points? We're going to have 25, 50 basis points. I don't think the market knows. And that is not settling. I don't think the market's made up its mind. The most important thing I can leave you with is most traders overtrade. Remember, there is no shame in staying out of the market as it makes up its mind. Too many times traders feel that they have to be involved, or their mind does trades that maybe the market doesn't see, and they overtrade. I would expect that Monday, Tuesday, and Wednesday are going, and at least until the chairman's conference, are going to be very difficult and very thin markets to trade. I'm sorry there's no real direction that I can see in here. My only advice is, like I say, is there's no shame in staying out of the market. Have a great week.